Hi all, this is Ashish Kyal here. Welcome again to Elliott Wave News Channel by wavestrategy.com. And in today's session, we are going to see the importance of channels, how we can use various channeling technique in order to understand where the markets are currently. And if you look at the channeling technique, you will understand why it is time to be alert. I mean, majority has turned super bullish again when Nifty is around 11,600, 500 levels. But prices are arrived at a very crucial juncture, not based on any other methods, but channels that has worked extremely well in the past. We are going to look at the same channeling technique and try to see where are we right now and vis-a-vis what to expect going forward. Meanwhile, you can also try and look at the markets and you will understand that the action has been getting more and more stock specific. There has been hardly a few stocks which has been helping index to stay afloat at the higher levels, and trading stock specific is also becoming a challenge. It's not an easy task right now. It has become a challenge, and that is a classical sign why even when Nifty is at lifetime high, is not necessarily you are making money. It's majority of the people are stuck in some or the other stocks that has not moved anywhere, and that's why the volumes are also getting thin. If you can look on the screen, I am showing a classical channel over here, which is connecting the lows of 6,825, which was made in 2016. If you connect the lower trend lines over here and project it on the parallel side on the upside, you are able to see the overall channel which has been working well. Now, this is the same channel which resulted into reversal back in 2016. Then again, multiple tops were formed exactly on this channel line, except an outlier which was there in the month of Feb 2018, where we saw a sharp up move, but equally faster reversal back within the channel line. So if you look at this, there has been an up move, a correction on the downside, again an up move which constantly stopped the trend, and then again reversal back on the downside. So we are again lying at the same blue channel, which is a very important one, and it is a multi-year channel. This is not a short channel, it's a multi-year channel. Price are exactly at this level, which is near the upper trend line. At the same time, if you look at the short-term channel, which is connecting the red one, connecting the lows of which was near the levels of 9958, and then again the lows which was formed near 10,558. If you look at those levels and connect it and draw a parallel red channel, price are again near the upper end of that trend line as well. So whenever there is a confluence of channels, this is the time where it's going to be a cautious approach. I'm not saying that you have to go and short the market, but this is the time to be cautious, not get carried away, because what I have seen in the markets, the most important aspect that I always rely on is the channel. At times, wave theory can become tricky because of the complexity of correction. The waves can get extended when we are in a diametric pattern. The waves can get extended like we have seen in recent times. But what works well during such times as well is the confluence of the channel. Also, during this time, it is best to keep following the trend following method. The simplest and the one of the best method which I personally use for trend following to understand the overall trend and the overall range of the market is using two different moving averages. So if you look at this chart of Nifty, you can see two different averages over here. The one is a 20-day average and the other is a 5-day average. If you look at the 20-day and the 5-day average, each of the swing which has happened before on the upside was maintained on the buy side unless and until we see prices moving below both these averages. So if you look at this chart very carefully, and this is what I have explained in today's morning research report as well, the financial waves short-term update, in which I mentioned about the key levels and also about the moving averages. If you look at it, each of the swing here, so the blue moving average, which is the 5 days moving average, has been above the 20 days, the red one. So this was the up move. As soon as price moved below it, we started seeing a correction on the downside, or time wise or a price wise correction. Again, the blue one managed to sustain above the red one. and the upward was sustained, and then again it was only on the reversal of prices below both of these averages we got a very strong negative confirmation. Same thing in this upswing as well. A very similar observation is there, and we are currently in the upswing, but prices are on the reversal of the average. That's a sign of caution, because this time again we are going to reverse back from the blue trend line, which you can see here, and also the red trend line which is there on the upside. So it is time to be cautious. Stock specific action can continue. 2018, I have been talking even on various business channels like BTVI and even on CNBC. I have been talking about 2018 being the theme for probably consumer space. Pharma stocks can start showing outperformance, and IT, which has been already outperforming. So these have been the stocks and the flavor which you can look forward in 2018, but you have to be very within this space as well. You have to be specific approach to selection of the stocks. Those specific stocks that we are selecting is mentioned in the multi-bagger research report, which we publish and gives a clear-cut indication on what to expect, what are the target levels, the stop loss levels, and why those stocks have the potential to increase to the extent of 60, 80, or 100% over the period of 2 years' time. Now coming back to Nifty, if you look at it, price are near the upper end of the channel. Let us go on an hourly chart and see what's happening here. If you look at the hourly chart and you look at the overall indicator, we can clearly see this is an ROC. We can clearly see that price have been reversing back again and again from the same level of 1.5 on the ROC. So that becomes the resistance level for ROC. There is no such specific level one has to look forward to. It depends on where prices have reversed previously, and this is what we can see. If you look at it very carefully and closely, you will be able to see there is a negative divergence already on the prices. Again, we are seeing Nifty made a new high above 11,620, whereas ROC made a lower high. That's a classical divergence that we have been witnessing. And if you look at it from the channel perspective also, this is another channel which kicks in on an hourly chart. If you look at it, this is another channel that has kicked in on an hourly chart. So there is a confluence of channels which is there on the markets, and this is the confluence of channels is become very important, because if this confluence of channel is not able to contain the prices now, and Nifty manages to cross about 11,600, 11,650 over next few days, then there is going to be a buying frenzy or mania, I would say. But chances of that happening is always less, because that's a very lower probable scenario, and it happens once in few years, I would say, or not even that frequently. So we would continue to observe what has worked in the past will work in the future, and that's why it's time to be cautious. Stock specific approach can be adopted. The only condition here is that with as and when the time passes, the resistance keeps shifting on the upside. So over here the resistance is currently near 11,600 levels. With few days or weeks passing, again this will shift again towards 11,640, 650, and that's how it will be delayed. Once we see a faster retracement back below the last rising segment, that's the classical sign that something is changing. So it is time to be alert. It's time to be cautious. At the same time, watch the key levels, which is given in the daily short-term research report, where you will be able to judge where you can enter the short positions in case market reverses. And for creating long positions, you have to adopt a stock-specific approach. On the index, it's not going to be an easy trade. On the option front, it's going to be very, very challenging, because the options are losing value big time. Whether you are buying call or you are buying put, both are losing value, and that's how it has been happening, because volatility has been reducing. So if you look at the daily chart, we can again see divergence which is happening on the ROC. The weekly chart shows divergence. There has been daily chart which is showing divergence, hourly chart showing divergence. So, and prices are at the channel resistance. At the same time, the euphoria is strong enough across, where everyone is now believing it's best to keep buying stocks, and the index is never going to turn down. That is the euphoria which is currently prevailing in, and that is the sentiment which is currently prevailing. So during such times, it's best to be cautious and stay alert. As and when the key levels break as per the morning research report, that will be the time to act for the next big trend, which is about to emerge very, very soon. So stay tuned. And I'll be speaking at an event tomorrow, which is conducted by Finbridge at Westin. You can join me there, and I'll be more than happy to clarify any of the doubts or queries. For any details, you can visit the website wavesstrategy.com or contact us on 99-204-22202. Meanwhile, if you want to create your portfolio of stocks, get access to the multi-bagger stock research report that we publish, and you can slowly and steadily start creating your own portfolio of investments in a very systematic fashion. That's it from my side, and stay tuned. Keep looking at the charts. Start applying the channels, not waiting for channels. And trust me, it's going to increase your accuracy drastically. Thank you very much. See you again same time next week. And visit the website wavesstrategy.com. You can find this webinar again. Have a wonderful weekend.